Hello and welcome to our channel. In today's video, we'll be discussing the latest cryptocurrency news, where Bitcoin has surged and touched the $30,000 mark. Bitcoin has been the most talked about cryptocurrency for years and has been on a bullish run since last year. However, in the last few days, it has seen a remarkable surge and touched the $30,000 mark, which is a significant milestone. The global cryptocurrency market capitalization is trading higher around $1.24 trillion. Bitcoin has surged almost 9% this week and touched a 10-month high. Bitcoin crosses $30,000 for the first time since June 2022. Last week, Bitcoin touched its was trading around $28,000 levels, and as soon as it broke this level on April 7, 2023, BTC started surging and touched $30,000 on April 23, 2023. Bitcoin, which was hovering around $20,000, started showing upside movement once the news of the fallout of technology-focused Silicon Valley Bank in the US broke out. This surge in Bitcoin's price has led to a lot of speculation and analysis from experts and enthusiasts. Some believe that it is due to institutional investors buying large amounts of Bitcoin, while others think it's a result of the general hype and FOMO, fear of missing out, around cryptocurrency. At this time, experts believe that the next key level for BTC to cross is $35,000. The recent financial crisis in the US has exposed risks in the banking system and upped the appetite for decentralized currency in the form of cryptocurrencies, which are often looked at as safer alternatives to the conventional banking system in a global environment full of uncertainty. Taking a look at where we are now, BTC broke through $30,000 in early Asia trading hours and has been choppy through early US trading. In our view, there are three predominant reasons for this year's rally in the crypto market. In the last few years, crypto advocates have firmly argued that Bitcoin in particular is a hedge against inflation. However, when inflation truly hit the world economy shortly after, causing central banks to respond by increasing interest rates and initiating quantitative tightening to decrease liquidity in 2022, Bitcoin did not satisfy this claim but instead performed badly during the soaring inflation. As inflation and monetary policy were leading factors in the crypto market's crash last year, we must turn our attention toward these factors as the tide turns. It appears that the market now expects an economic slowdown, forcing central banks to stop interest rate hikes, maybe even slightly lowering them before the year's end. This has caused an increase in risk appetites just as market participants reassess their portfolios based on a fresh outlook. In February and March, several American banks ceased operations mainly due to liquidity concerns, strikingly including CryptoBank Signature and Silvergate. This triggered a shift in deposits from, for instance, regional banks to large banks, as depositors started to fear additional bank collapses. Due to the decentralized nature of crypto assets, we perceive it likely that the fear of bank collapses has fueled the surge in crypto prices, as crypto somewhat lives outside traditional financial services. Stressed by the claim that Bitcoin is an inflation hedge, one should be critical to every crypto-specific call now or then, including that crypto is somewhat of a safe haven. But looking back at the past few months, we think crypto's decentralization has played a positive role in the recent surge of crypto prices. Whatever the reason may be, it's clear that Bitcoin has established itself as a significant player in the world of finance and investments. The surge in its price has also led to a renewed interest in other cryptocurrencies, such as Ethereum, Litecoin, and Ripple. Crypto markets were down on Wednesday during the early hours in Asia. Bitcoin was able to make some gains where Ethereum posted a big fall on the eve of its Shapella upgrade. Traders keenly awaited the US inflation numbers later in the day for the monetary policy pathway in the days to come. After lingering near a macro fib resistance of around $28,000 for more than 3 weeks, Bitcoin, BTC, has finally surpassed the critical $30,000 mark in the past few days, giving a strong boost to the bulls. With no significant resistance immediately ahead, BTC seems well positioned to challenge the next fib resistance close to $32,000 in the days to come. Moreover, the robust support provided by the 0.38 fib level at $28,000 serves as a safety net, instilling confidence in the bulls to keep pushing BTC higher. Another important development in the world of cryptocurrencies is the growing interest in non-fungible tokens, NFTs. NFTs are unique digital assets that use blockchain technology to verify their ownership and authenticity. They have gained popularity in the art world, where they are being used to buy and sell digital artworks. The rise of NFTs has opened up a new world of possibilities for creators and artists. They can now sell their digital art without worrying about piracy or unauthorized copies. The use of blockchain technology ensures that the original owner of the artwork is recognized and compensated for their work. However, there are concerns about the environmental impact of cryptocurrencies. Bitcoin, in particular, is known for its high energy consumption due to the mining process. As cryptocurrencies become more mainstream, there will be a need to find more sustainable ways of mining and processing transactions. Cryptocurrencies offer several advantages over traditional financial systems, including decentralization, anonymity, security, lower transaction costs, fast transactions, accessibility, and investment opportunities. However, it's important to weigh these advantages against the risks and challenges associated with cryptocurrencies before making any investment decisions. Advantages of cryptocurrencies. Cryptocurrencies offer several potential advantages over traditional financial systems, including decentralization. Cryptocurrencies operate on a decentralized system, meaning they are not controlled by any central authority or government. This reduces the risk of fraud, censorship, and corruption. Anonymity. Cryptocurrencies offer a high level of privacy, allowing users to make transactions without revealing their identity or personal information. Security. Cryptocurrencies use advanced cryptographic techniques to secure transactions and prevent fraud, making them a more secure option compared to traditional financial systems. Lower transaction costs. Cryptocurrencies generally have lower transaction fees compared to traditional financial systems, as they do not require intermediaries such as banks or payment processors. Fast transactions. Cryptocurrency transactions can be completed quickly, often in a matter of minutes, compared to traditional financial systems that can take several days to process. Accessibility. Cryptocurrencies can be accessed by anyone with an internet connection, making them available to people who may not have access to traditional financial systems. Investment opportunities. Cryptocurrencies can be used as an investment asset, with the potential for high returns. However, it's important to note that there are also risks associated with investing in cryptocurrencies, such as high volatility and lack of regulation. Despite all of the gloom and uncertainty, progress in the evolution of the industry has continued. Ethereum this week completed what appears to be a successful upgrade to its network. The so-called Shanghai Update, which enables investors to withdraw Ether coins that they had locked up in exchange for rewards as part of a proof-of-stake system to safeguard the network, could lure billions of dollars into Ether even after SEC Chair Gary Gensler indicated he believes that token ought to be regulated as a security. The price of Ether rose back above $2,000 this week for the first time in 6 months. Institutions started to take Bitcoin seriously after Bitcoin broke $20,000 in 2020 and played a key role in the subsequent rally. What is the futures of cryptocurrencies? The future of cryptocurrencies is uncertain, but there are several potential developments that could shape their future. Regulation. Cryptocurrencies are currently largely unregulated, but there is a growing interest in regulating them. The degree of regulation that is ultimately imposed on cryptocurrencies could have a significant impact on their adoption and value. Mainstream adoption. Cryptocurrencies are becoming more widely accepted, with major companies such as PayPal, Tesla, and Visa announcing plans to accept cryptocurrencies as payment. If this trend continues, cryptocurrencies could become more widely adopted as a means of payment and store of value. Why we should invest in cryptocurrencies. Investing in cryptocurrencies can offer several potential benefits, including high potential returns. Cryptocurrencies are highly volatile, and as a result, they offer the potential for high returns. However, it's important to note that high potential returns also come with high risks. Diversification. Cryptocurrencies offer a way to diversify your investment portfolio. By investing in cryptocurrencies, you can potentially reduce your exposure to traditional financial markets and their associated risks. Accessibility. Investing in cryptocurrencies is becoming increasingly accessible, with many reputable exchanges and digital wallets available to investors. This means that you don't need to be an expert in finance or technology to invest in cryptocurrencies. Decentralization. Cryptocurrencies are decentralized, meaning they are not controlled by a single entity or institution. This can provide a level of independence and security that is not possible with traditional financial systems. Innovation. Cryptocurrencies are based on blockchain technology, which has the potential to revolutionize many industries. Investing in cryptocurrencies can provide exposure to this innovative technology and its potential applications. It's important to note, however, that investing in cryptocurrencies also comes with significant risks, including high volatility, lack of regulation, and cybersecurity risks. It's important to do your research and understand the risks before investing. It's also recommended to diversify your investments and not invest more than you can afford to lose. Technological advancements. Cryptocurrencies are based on blockchain technology, which is still in its early stages of development. As the technology continues to evolve, it could lead to new and innovative use cases for cryptocurrencies. Increased competition. There are currently thousands of cryptocurrencies in circulation, and new ones are being created all the time. As the market becomes more crowded, it could become more difficult for individual cryptocurrencies to stand out and gain widespread adoption. Environmental concerns. The energy consumption required to mine and process cryptocurrencies has raised environmental concerns, particularly in light of the growing urgency of the climate crisis. As a result, there is increasing pressure on cryptocurrencies to become more energy efficient or transition to more sustainable alternatives. Overall, the future of cryptocurrencies is difficult to predict, but it is clear that they have already made a significant impact on the financial world. The continued growth and development of cryptocurrencies will depend on a variety of factors, including regulatory developments, technological advancements, and environmental concerns. In summary, cryptocurrencies offer several advantages over traditional financial systems, including decentralization, anonymity, security, lower transaction costs, fast transactions, accessibility, and investment opportunities. However, it's important to weigh these advantages against the risks and challenges associated with cryptocurrencies before making any investment decisions. Thanks for watching this video. See you in next video.